Good afternoon, everyone. Today marks the beginning of an insightful journey, a six-part series designed for business owners and professionals, navigating the complexities of wealth management and financial strategy. Over the next sessions, we will delve into critical aspects that impact your business success and your personal financial well being. Throughout this process, we will explore how business owner can create and sustain wealth, adopt to evolving landscape of corporate taxation, and strategically plan for the sale of their business. We will uncover effective tax strategies to grow and assess your wealth, access your wealth, assess where you currently stand in your life stage, ensuring your financial plan aligns with your current reality. By the end of the journey together, we will bring it all together to illustrate how implementing these strategies can enhance outcome, achieve your financial goals. Your participation and input are invaluable as we navigate these topics together. So let's embark on this journey of learning and discovery. I hope you find this series not only informative but also empowering in your financial decision making. So thank you very much for joining me, and let's get started. So here's the breakdown of our series. The episode 1, we will talk about business cycle and wealth creation, discussing how business owner creates wealth and understand the full business cycle. The part 2, changing nature of corporate taxation, exploring the evolving landscape of corporate taxes, a critical topic for business owner to stay informed about. Number 3, selling your business. Guidance on the process of selling your business, including structuring the sell and what happened post sell. Number 4 episode, we will talk about tax strategy for growing and accessing your wealth. Strategies for utilizing and accessing wealth during your lifetime and with the focus of tax implications. Number 5, we're going to talk about Frank and Isabel current stage, examining where these business owners and professionals currently are in their life and how it impacts their financial planning. So we're going to look about their current stage, what happening right now. Then in the last episode, we're going to take Frank and Isabel and create an enhanced stage. We are bringing it all together, and we're going to illustrate how implementing these strategies can enhance outcome for Frank and Isabel or and achieve help them to achieve their financial goals. So that's the outline for our series. So we're going to start with the episode 1. I hope you guys enjoy this journey as much as I am doing it. Thank you very much. So navigating of each stage of a business cycle, it's a pretty much very different for different people, but it is sometimes it's pretty similar. So if you look at a business, a startup, a business owner or professional, so in the beginning, managing cash flow of the business is a very big priority. Protecting your income and your family well-being is very important, and make sure your exposure to liability is looked after. If your business is making money and you should the incorporation is a question to consider. Then you have to look at that, okay, at the early stage of business, that the cash flow might not be there to buy permanent policy, but you have to protect yourself. So the term insurance and disability and critical insurance is an important part of the early stage of the business and professional life. As the business grows, then your complexity increase, that the growth of the business will bring other shareholders, partnerships agreement that has to be considered, by self funding, that if the one of the partner is no, what is the agreement between partners in case one partner is not there, and how the other partner is going to buy that partner's share, and how that is funded. So life and disability becomes a big question. A group health benefit, as you have multiple employees, the group benefit is extremely important to retain good employees and appreciate and help them with their life cycle. A business owner overhead insurance some is very important point to consider. Key person insurance is very important thing to consider, because in every business there's a few key employee which are the primary source of income, and that those has to be protected. When the business reached the maturity stage, the appropriate use of holding company and trust becomes very important, because in Canada, the corporate taxation is slightly is less than personal taxation, and creates a deferral opportunity. Trusts are very important, where you are able to protect a lot of family members, and do some tax planning also. Tax efficient allocation of investment is very important. Not all tax dollars get taxed same. Personal and corporate are different, and we will explore more. Personal individual pension plan, IPP, I'm a very firm believer of IPP. It gives the business or a professional create their own pension plan, and have the ability to use the registered asset for their full potential. Permanent insurance cash value is a very one of the good way to defer to grow a passive asset under exempt line. And then succession and transition. Advice on restructuring sell. It's a very that you build something whole life. You want to be sure that business, you get the full value of that business when you exiting it. And tax efficient investing and drawdown, because when you're taking money out of the corporation, and I usually use these words, that when you are a business owner, you are accumulating asset, you are getting a paycheck from your business. But when you are in retirement phase of as a business owner, those assets has to pay you for your retirement income, and they have to be very tax efficient. Life annuities, permanent insurance, and charitable giving is one of the important parts to consider. We are all fortunate to live in this country, and there's a we have this shared responsibility to leave uh, impact on the society, so we are able to help you with that. Business owner, in my view, creates wealth at three different places: personal assets, corporate investments, and business value. Those are the three places business owner typically built up assets or built up wealth and value. So the business owner usually use the same in a personal side, same um, accounts which I have available to every other Canadian. They use the RSP, tax free saving account. They will have real estate, personal home, non-registered investments which are outside of the corporate structure. So those are the personal assets. Then the corporate where it's get little bit different. The Since the corporate tax rates are on active income are generally so lower than the personal tax rates. So most profitable businesses are incorporated. So since the retaining profit within the corporation will defer the recognition of the personal taxes, many business owners built up investment assets within the corporation. So frequently, so basically, there's a operating corporation, and there is a separate holding company or investment corporation where most of the passive assets are built up. So now the third place where, in my experience, the most of the wealth is accumulated for a business owner and professional is the value of their business, the business which they spend whole life building it up. So sometime there's a question has to be asked, that is the business is sellable. In case where there is a professional is the sole income earner and sole billing person in the corporation, is the business is sellable beyond that person. Then the second question comes up, which what is the value of the business, that you spend whole life trying to build this business. If that business you want to get the full value of that business, so value driving the value, what is the value of the business is very important. And then with the question comes in, who this business gets sold to. In today's world, that it is a very big question, who is going to take over the business. In my practice and in my business network, I helped a quite few individual exploring with them and helping them to find that exit strategy. So that is where the huge amount of work is it needs to be done. So this is the end of our first episode. I will see you in 2 weeks with the second episode. Have a wonderful day.